Heritage Capital President Paul Schatz. All right, Paul, we know where you're coming from, but it could have been worse. We could have fallen off the cliff, right?
I'm not sure that would have been worse. And frankly, I thought the fiscal cliff was the biggest hoax since Y2K. The country was going to function on January 1 and January 2 regardless. It wasn't a cliff. It was more like a hill that eventually we would climb up and get too tired and fall back in the second or third quarter. I think the administration, the politicians did a wonderful job of muddying the real waters, and that is we are on no sounder fiscal ground than we were yesterday or the day before, or the week before, the month before. So they somehow boiled it down to taxes. Taxes are not our problem. So spending's our problem.
Maybe our problem, though, is just Congress in general, right? And the way they handle things and the fact that everything is decided last minute, because now here we are 2 months away from a debt ceiling debate now, which could arguably be way worse for the markets than this fiscal cliff mess ever was.
Yeah, you faded out for a minute. I didn't hear your question.
That's okay, but the debt ceiling at the end of the day is going to end up being worse for the markets than the fiscal cliff, isn't it?
Yeah, most likely. The sad thing is we've come down to making deals at literally 1 second before midnight. Now, we've done it twice. Somehow this is now par for the course in Congress. It's not good for the markets. It's not good for the economy. It's horrible for corporate America, and it's bad for investors. If our behavior continues like this, we're going to end up a lot worse than Europe. I don't think it will continue that bad, but that's where we're headed. It's not good for anybody. We still have no certainty. Corporate America is no more certain today than they were a week ago or a month ago. And what's changed? Nothing.
Well, Paul, you say that any gains this year are going to be front-loaded, and you believe that by the end of this year and beginning of 2014, we could indeed slip back into recession. But, you know, look, housing is looking healthier. The auto industry is doing better. Consumer sentiment last month hit an 8-month high. Surely there are some encouraging signs there.
Absolutely. I think second half of 13 and 14 would be the warning times for me to worry about a mild recession. Corporate America is still in great shape. They got almost $3 trillion in their balance sheets. They're still lean and mean. I think gains are going to be front-loaded, yes. If you're a stock market investor, I think the best time for the market is going to be earlier in the year. Pretty much what worked at the end of last year, you know, industrials should continue decently. Maybe a little technology, a little energy, a little healthcare, and then at the backside of the year, I flip it all around, and I think you'll do better with staples and utilities and telecom and kind of the stuff that nobody really wants to own right now.
Why do you think we're going off this so-called cliff at the second half of the year? I mean, by then, you got to believe everything will relatively be settled.
No, I don't think it's going to be settled. Frankly, I think we're in this 2-year election cycle again, and in another 6 to 8 months, we'll talk about the congressional elections in 14, but the real reason is because taxes are going up. So few people realize the average person, this is not a $250K and above or $450K and above. The average person's taxes are going to go up. That's less money that's going to go in the economy. No one's talking about the Obamacare taxes and surtaxes and charges that are starting today. All this money comes out of everyone's pockets. If it's coming out of our pockets, there's a multiplier effect. It doesn't go into the economy. It doesn't get spread out. So I don't know how you could be so sanguine on the economy, especially the second half of the year, unless you somehow think the emerging markets are going to explode higher and lift everyone's ship with it. I don't think so. Europe's mired in a recession. Maybe it gets a little better, but I think here we've got a little bit of payback to give second half of the year.
Paul Schatz, thank you so much for joining us.
Thanks.
Really appreciate it. In fact, we just talked about the extra costs involved with Obamacare
Elizabeth
just yesterday with
yesterday, yeah, they're coming fast and furious. All right. And